Let's talk about Manappuram Finance now. Their Q3 net interest margins have surged to a 10-quarter high. The company has a solid non-gold portfolio and is also diversifying into the non-gold space. Their asset quality, though, has deteriorated. VP Nandakumar, the MD and CEO of the company, joins us now to talk about that. Mr. Nandakumar, thank you for being with us on the channel. Always good speaking to you. I want to first start by asking you about the net interest margins, which have been quite strong this time. It's the highest that we've seen in the last 10 quarters. But the company is also diversifying away from the gold portfolio gradually. So tell us a little bit about what the margin performance could look like. Can you build on to these levels further? And over the next 12 to 18 months, what are we looking at?
So we hope the margins could be maintained because we are short-term lenders, even though we lend for 1 year. The usual nature of the customers is to avail for 2-3 months. The average life is around 3 months. And average ticket in gold loan also remains around 50,000. So we hope to maintain the net interest margin at this level.
Okay, so you hope to maintain your net interest margin at this level. The reason I asked is because RBI has tightened norms, right, across the board for consumer lending, etc. Do you think that would in any way affect your margins?
No, we are falling within our norms. Our board is always conscious about to work within the norm, and board take a decision based on that only, always.
Mr. Nandakumar, hi, good morning. Prashant here. So, could you talk to us about, the gold loan book, where on a quarter-on-quarter basis, growth was kind of flat. This despite the fact that gold prices went up, 5% plus in the quarter. Usually we see a bump up in the advances as well. Will we see that in the coming quarters? What happened?
So year on year, if you take the gold loan has grown around 11%. Quarter to quarter flat because some seasons it used to be like that. Gold demand used to be seasonal. And gold price has no much relevance, even though it is. But it will not affect beyond a certain point because the requirement for money is more important because these people will have to redeem and they used to redeem. In the ordinary course of business, around more than 95%, 96% gets redeemed in the usual course. So that means, within 3 months, they have to find out the cash flow. So they are very conscious about borrowing a higher sum based on the price. So it may not have much impact.
Okay, all right. Hi, good morning, Mr. Nandakumar. When you joined us the last time, you told us the ideal mix will be 50% each, gold as well as non-gold. You're almost so there. It's come down to around 51.5% approximately. What about growth for the year? I think on gold, you were guiding for around 7 to 8%. And on the overall book, you were guiding for around 20% for FY24. Hold on to that?
Yeah, we hold on to that. We expect a reasonable growth during the last quarter. We used to get our last quarter always used to be good for gold loan.
Got it. All right. So just one more question, before we get back to your operational performance. There have been some rumors that possibly, there could be some bit of a buyout news on Manappuram Finance. You want to clarify on that? Is it on the block? Is there anyone who you're talking to?
No, it is absolutely nonsense. It is completely a false news.
Got it, sir. We need to clear out everything for our viewers. So that's why I just needed to ask you on that front as well.
Thank you.
And thank you for that clarification as well. I just want to understand a little more of what's happening in the rural and semi-urban market, Mr. Nandakumar, because, certain pockets like farm equipment, for example, that entire agri segment has been under a lot of pressure. I'm sure there's some spillover impact into your industry as well. Do you think that there could be some more pain before things improve?
Our finance to farm equipments is low. Our car loan portfolio, commercial vehicle portfolio, these are doing well. We have only a very small portion of these farm equipments. And that for us, that did not pose any much challenge in the asset quality.
No, that was just an example that I was giving you, that some of these rural industries are under pressure, but you're saying that you're not seeing any pain as a lender in rural or semi-urban markets?
We don't see any unusual pressure there. Maybe because our portfolio is low and we are very cautious about that.
I think, Mr. Nandakumar, you're also saying that the cost of funds perhaps will inch up a little bit more, right, in the fourth quarter. But I mean, we heard from the RBI yesterday. I think there is a general realization that system interest rates perhaps will stay at these levels for longer. So no real cut or anything soon. So what's your assessment for the fourth quarter in terms of cost of funds and beyond?
The RBI's projection of inflation for next year is 90 bps lower. So I hope that may be an indication that the rates may not go up and gradually the rates may come down. And our expectation about the borrowing rate going up maybe around 10-15% at the maximum. But being small ticket short-term lenders, it may not be difficult for us to pass on in the event of a need.
You mean 10-15 basis points, Mr. Nandakumar?
Maybe in the last quarter. That is the maximum expectation, if at all it happens. But yesterday's CNBC meeting used a lot of comfort because the rates are kept stable there. But at the same time, the projection of inflation for FY25 is 90 bps lower. That means the indication may be the rates cooling down.
Got it. All right. Mr. Nandakumar, the Asirvad MFI IPO that's been put in abeyance by SEBI. Could you tell us what is the update out there and when can we expect this IPO to hit the markets?
We expect that this is our expectation to take it by mid-March or early April.
By mid-March or early April. Okay. That's so there has been progress that has been made there. Got it. Thanks for that clarification. Finally, any kind of growth outlook that you would have? I mean, for FY25, what are we staring at in terms of growth for the company?
So our expectation always remains about the consolidated level at around 18 to 20%. And we hold that.
Okay, 18 to 20%. And in non-gold portfolio, what could the growth be?
Non-gold may be higher. Maybe we expect around 30% growth.
Okay, 30% growth in non-gold and overall 18 to 20% growth is what you're looking at. All right. Mr. Nandakumar, we'll leave it at that. Thank you so much for joining us and speaking to CNBC TV18.